What if the only thing standing between you and confident investing was just 5 simple shifts? Are you ready to discover what they are? Let me help you. Make sure to watch until the end as I will go over understanding the basics of investing, the importance of research, and more. Investing can seem like a daunting world to navigate, especially for beginners. With so many options available and a plethora of information out there, it's easy to feel overwhelmed. In this video, we'll dive into the fundamental aspects of investing and the common challenges that many face before mastering key strategies. Whether you're looking to grow your wealth, save for retirement, or simply learn how to make your money work for you, understanding the basics is crucial. Throughout this video, we'll explore 5 essential lessons that can help demystify the investing process. From understanding risk and reward to recognizing the importance of diversification, these lessons will provide you with a solid foundation to build upon. We'll also discuss common pitfalls that new investors encounter, ensuring you're equipped to avoid them. By the end of this video, you'll not only have a clearer understanding of investing, but also feel more confident in your ability to make informed decisions. So, if you're ready to embark on your investing journey and discover the strategies that can lead to financial success, stick around. Let's unlock the secrets of investing together and set you on the path to achieving your financial goals. Understanding the basics of investing. Before diving into the world of investing, it's essential to grasp some fundamental concepts that will serve as your foundation. Let's start with key terms. Stocks represent ownership in a company, allowing you to benefit from its growth and profits. Bonds, on the other hand, are loans you give to governments or corporations in exchange for interest payments over time. Mutual funds pool money from multiple investors to purchase a diversified portfolio of stocks and bonds, making them a great option for those looking to spread their risk. Understanding the relationship between risk and reward is crucial for any investor. Generally, higher potential returns come with higher risks. For instance, while stocks can offer significant growth, they can also be volatile. Conversely, bonds tend to be more stable but usually provide lower returns. Knowing where you stand on the risk spectrum will help you make informed decisions that align with your financial goals. Having a solid foundation in these concepts is vital before you delve deeper into more complex strategies. By familiarizing yourself with these basics, you'll be better prepared to navigate the investing landscape and make choices that can lead to long-term financial success. Remember, a strong start can set the tone for your entire investing journey. The importance of research. When it comes to investing, knowledge is power. Conducting thorough research before making any investment decisions is crucial for achieving better outcomes. By understanding the companies, industries, and market conditions you're investing in, you can make informed choices that align with your financial goals. Research helps you identify potential risks and rewards, allowing you to weigh your options carefully. There are various resources available to investors that can aid in this research process. Financial news outlets, investment blogs, and analysis tools provide valuable insights into market trends and company performance. Websites like Yahoo Finance, Bloomberg, and Seeking Alpha offer up-to-date information and expert opinions that can help you gauge the health of your investments. Additionally, utilizing stock screeners can help you filter through thousands of options based on specific criteria, making it easier to find investments that suit your strategy. Staying updated on market trends and company performance is essential for any investor. Markets can change rapidly, and being informed allows you to adapt your strategy accordingly. By prioritizing research, you not only enhance your understanding of the investment landscape, but also increase your chances of making successful investment decisions. Remember, a well-researched investment is often a more profitable one. Diversification, a key strategy. Diversification is a fundamental investment strategy that involves spreading your investments across various asset classes to reduce risk. The idea is simple. By not putting all your eggs in one basket, you can mitigate potential losses. If one investment performs poorly, others may perform well, balancing out your overall portfolio performance. For example, a diversified portfolio might include a mix of stocks, bonds, real estate, and commodities. This way, if the stock market experiences a downturn, your bonds or real estate investments may still provide stability and income. Additionally, within the stock category, you can diversify further by investing in different sectors, such as technology, healthcare, and consumer goods. This approach helps protect your investments from sector-specific downturns. The benefits of diversification are clear. It can lead to more consistent returns over time and reduce the volatility of your portfolio. While no investment strategy is foolproof, diversification can significantly lower your risk exposure. As you consider your investment strategy, think of diversification as a long-term approach. It's not just about immediate gains, but about building a resilient portfolio that can weather market fluctuations. By embracing diversification, you're setting yourself up for a more stable financial future. Emotional discipline in investing. Investing is not just about numbers and strategies, it's also deeply psychological. Emotional discipline plays a crucial role in making sound investment decisions. Common emotional pitfalls, such as fear and greed, can significantly impact your choices. For instance, fear may lead you to sell off investments during market downturns, while greed can push you to chase after high-flying stocks without proper research. Both reactions can derail your long-term financial goals. To maintain discipline during market fluctuations, it's essential to have a well-defined investment plan. Set clear goals and stick to your strategy even when emotions run high. Consider implementing stop-loss orders to protect your investments and prevent panic selling. Regularly reviewing your portfolio can also help you stay focused on your long-term objectives rather than getting caught up in short-term market movements. Encouraging a long-term mindset is vital for successful investing. Instead of reacting impulsively to market news or trends, remind yourself of your investment goals and the reasons behind your choices. By cultivating emotional discipline, you can navigate the ups and downs of the market with confidence. Remember, investing is a marathon, not a sprint, and maintaining control over your emotions will help you reach the finish line successfully. In conclusion, we've explored 5 key lessons that are essential for anyone looking to succeed in the world of investing. First, we discussed the importance of understanding the basics, including key terms like stocks, bonds, and mutual funds. Next, we highlighted the necessity of thorough research, which empowers you to make informed decisions. We then delved into the concept of diversification, emphasizing how spreading your investments can mitigate risk. Following that, we addressed the psychological aspects of investing, particularly the need for emotional discipline to avoid common pitfalls like fear and greed. Finally, we encouraged a long-term mindset, reminding you that patience and consistency are vital for achieving your financial goals. Applying these lessons is crucial for successful investing. By integrating these principles into your strategy, you'll be better equipped to navigate the complexities of the market and make decisions that align with your objectives. If you found this video helpful, we encourage you to subscribe to our channel for more valuable content on investing and personal finance. Don't forget to like and share this video with friends and family who might benefit from these insights. Together, let's build a community of informed investors ready to take charge of their financial futures. Thanks for watching. Remember to subscribe and turn on notifications so you don't miss more videos from additional source income, money strategies, and much more. Check out my playlist and I'll see you in the next video. Take care.